The Advanced AI ETF Dividend Reinvestment Framework. Amplify your passive income. Are you an experienced investor, perhaps already with a substantial investment portfolio, wondering how to truly harness the cutting edge of artificial intelligence not just for growth, but to powerfully amplify your passive income? Many discerning investors are drawn to the dazzling potential of AI, but the path to integrating it into a sophisticated dividend reinvestment framework can seem complex. What if there was a clear step-by-step method to marry the rapid advancements of AI with the steady compounding power of dividends, transforming your wealth management strategy? Imagine your investment portfolio as a meticulously cultivated garden. You tend to it, nourish it, and watch it grow. Now, picture an advanced irrigation system powered by the very latest in artificial intelligence. This system doesn't just water your plants. It analyzes soil conditions, predicts weather patterns, and precisely delivers nutrients to optimize every single bloom. In the world of financial planning, this intelligent irrigation is our Advanced AI ETF Dividend Reinvestment Framework. It's about leveraging the insights of AI-driven exchange-traded funds, known as ETFs, and then strategically reinvesting the dividends they generate to cultivate truly exceptional long-term wealth accumulation. Today, we will delve into precisely how you, as a discerning investor, can implement this cutting-edge framework. We'll explore what advanced AI ETFs are, demystify the concept of dividend reinvestment, and provide a clear, actionable path to integrating these powerful forces for unprecedented investment returns and financial freedom. This is not about speculation. It's about intelligent, disciplined investing designed to optimize your capital appreciation and income generation. Before we dive deeper into the powerful mechanics of this framework, and as a sincere thank you for your continued engagement and trust in the valuable information we're sharing, if a brief advertisement should appear, please allow it to play through. Your patience truly helps support our mission to bring you more insightful content on wealth creation and financial security. With that, let's continue our journey into optimizing your portfolio. Understanding the pillars. Advanced AI ETFs and dividend reinvestment. First, let's ensure we have a crystal clear understanding of each component that forms the bedrock of this strategy. To begin, let's talk about advanced AI ETFs. An exchange-traded fund, or ETF, as you likely know, is essentially a diversified basket of securities that trades on stock exchanges just like individual stocks. When we speak of AI ETFs, we're referring to funds that provide targeted exposure to the burgeoning world of artificial intelligence. But here's the crucial distinction for advanced AI ETFs. They often fall into a few sophisticated categories. Some AI ETFs focus intensely on companies directly involved in developing AI software, designing AI-powered products, or manufacturing the crucial AI hardware like advanced semiconductors and graphics processing units. These are the true pioneers shaping the future of computation, forming a vital part of your equity investments. Other AI ETFs take an even more intriguing approach. They actually utilize AI-powered algorithms themselves to analyze vast amounts of market data, identify subtle trends, and even make stock selection decisions for the fund. This means the fund manager isn't just human. It's a powerful AI system constantly optimizing the portfolio for superior portfolio performance. These are truly cutting-edge investment vehicles designed to capitalize on rapid technological shifts, providing focused exposure to innovation within your investment portfolio. Now, let's turn our attention to dividend reinvestment. Simply put, when an ETF or a stock you own pays a dividend, which is a portion of a company's earnings distributed to its shareholders, instead of receiving that payment as cash, you use it to automatically purchase more shares or fractional shares of that very same ETF. This entire process is often seamlessly facilitated through a dividend reinvestment plan, commonly known as a DRIP. The immense power of dividend reinvestment lies in its harnessing of compounding. Imagine a snowball rolling down a hill. As it gathers more snow, it grows larger, and its momentum increases, allowing it to collect even more snow at an accelerating rate. Similarly, when your dividends buy more shares, those newly acquired shares then generate their own dividends, which in turn buy even more shares, creating a powerful, exponential growth loop. This is the very engine of wealth accumulation that has propelled countless astute investors toward financial independence. It's a passive yet incredibly potent strategy for maximizing long-term investment returns. So, as you can see, understanding these two elements is foundational to the powerful framework we're building. The synergy. Why AI ETFs and dividend reinvestment are a perfect match. Now, let's explore why combining advanced AI ETFs with a disciplined dividend reinvestment framework creates such an incredibly compelling investment strategy for high-net-worth individuals like yourself. It's about achieving a level of financial freedom that few attain. The artificial intelligence sector is characterized by explosive growth and rapid innovation, a landscape ripe for significant capital appreciation. Companies in this dynamic space are often reinvesting heavily in research and development, which can lead to substantial gains for their stocks, and by extension, for the AI ETFs that hold them. While many pure growth stocks might not pay substantial dividends, a growing number of established technology companies with significant AI involvement do now offer competitive dividend yields. Furthermore, some AI ETFs are specifically designed to include dividend-paying companies from within the broader AI ecosystem, giving you the best of both worlds. By strategically choosing AI ETFs that have a dividend component, you are tapping into two powerful forces simultaneously. First, you gain the potential for high-growth returns from a truly transformative industry. Second, you secure a reliable stream of passive income through those very dividends. When you then diligently reinvest those dividends, you are effectively pouring high-octane fuel back into an already powerful engine. Your overall investment is not only growing through the market value appreciation of its underlying AI stocks, but also expanding its base of shares, allowing the compounding effect to work its magic even faster. Consider this insightful perspective. An AI ETF might initially offer more modest dividends compared to a traditional dividend ETF. However, if that AI ETF experiences substantial capital appreciation due to the sector's rapid growth, those initially modest dividends, when reinvested, will buy you an increasing number of shares at what could be perceived as lower prices relative to future growth potential. This is a subtle yet incredibly potent form of dollar cost averaging that occurs automatically within your reinvestment strategy. It's about intelligently optimizing both growth potential and income generation within a single, sophisticated approach, enhancing your portfolio performance and significantly contributing to your retirement planning. This synergy is truly where the magic of this framework lies. Crafting your framework. Step-by-step implementation. Building this advanced AI ETF dividend reinvestment framework is a clear, systematic process. It requires thoughtful selection, disciplined execution, and a forward-looking perspective on your financial future. Step 1. Identifying suitable advanced AI ETFs. This is arguably the most critical initial phase. Not all AI ETFs are created equal, particularly when your goal involves robust dividends. You need to identify AI ETFs that not only offer strong, diversified exposure to innovation in the artificial intelligence space, but also possess a history or a stated mandate of paying consistent dividends. Research focus. Begin by thoroughly researching ETFs that hold a truly diversified basket of companies involved in various facets of AI, From cutting-edge AI software development to precision AI hardware manufacturing, and even those utilizing AI-powered algorithms to actively manage the fund itself. This broad approach minimizes idiosyncratic investment risk. Dividend mandate. Scrutinize the ETF's prospectus or summary sheet carefully for its dividend policy. Does it explicitly aim to provide dividend income? What has its historical dividend yield been? Remember, you're not necessarily seeking the absolute highest immediate yield, but rather a consistent and sustainable yield from a fund with robust growth potential in the AI sector. Expense ratios. As with all ETFs, pay very close attention to the expense ratio. While some highly specialized AI ETFs might command slightly higher fees due to their niche focus or active management strategies, you still want to ensure these fees are reasonable and not eroding your potential investment returns. A lower fee means more of your investment capital remains invested and continues to compound. Underlying holdings. Dive deeply into the top holdings of these AI ETFs. Are they established, financially sound companies with strong leadership in AI? Or are they smaller, more speculative ventures? Often, a judicious blend can be ideal for a balanced approach to managing investment risk while still capturing upside. Step 2. Activating dividend reinvestment. Once you have carefully selected your advanced AI ETFs, the next crucial step is to ensure that any dividends they distribute are automatically and immediately reinvested. Brokerage platform. Virtually all major online brokerage platforms offer a simple and straightforward option to enable dividend reinvestment plans, DRIPs, for your ETFs. This setting is typically found within your account preferences or by navigating to your specific holdings. Fractional shares. It is paramount to confirm that your chosen brokerage supports the purchase of fractional shares for ETFs through their DRIP programs. This is absolutely crucial because it ensures that every single penny of your dividend payment, no matter how small, is put to work buying more shares rather than sitting idle as cash. This optimizes the potent compounding effect and maximizes your wealth accumulation. Tax considerations. While the power of dividend reinvestment is undeniable, it's vital to remember that dividends, even when reinvested, are generally considered a taxable event in a non-retirement or taxable account. They are treated as if you received the cash and then used that cash to buy more shares. Therefore, maintaining meticulous records for tax purposes is highly advisable, or even better, consult with a qualified tax advisor. Holding these investment vehicles within tax-advantaged accounts like a Roth IRA or a traditional IRA can significantly defer or even eliminate these taxes, further enhancing your long-term wealth accumulation for retirement planning. Step 3. Consistent contributions and strategic rebalancing. This framework, like any thriving garden, demands both consistent nourishment and periodic, thoughtful care. Regular contributions. Beyond simply reinvesting dividends, endeavor to make regular, additional contributions to your AI ETF portfolio if your financial situation comfortably allows. This is akin to constantly adding fresh, nutrient-rich soil to your garden, consistently accelerating its overall growth and density. Periodic rebalancing. The AI sector, by its very nature, can be incredibly dynamic and fast-moving. Over time, the rapid growth of certain holdings might cause your asset allocation to drift significantly from your initial target percentages. Therefore, periodically, perhaps annually or semi-annually, it is prudent to review your portfolio and rebalance it. This disciplined process might involve selling a small portion of an AI ETF that has grown exceptionally to reinvest those proceeds into another AI ETF that may have lagged, or to maintain your desired overall weighting in the AI sector. This active, yet disciplined, approach ensures you are continually managing investment risk, optimizing your portfolio diversification, and aligning your holdings with your broader financial planning goals. It's about being proactive in your wealth management, ensuring your portfolio stays on the optimal path for financial freedom. The unseen power, compounding and long-term vision. The true, often unseen, brilliance of this advanced AI ETF dividend reinvestment framework lies in its profound ability to leverage the quiet, yet incredibly powerful, force of compounding. It's easy for even experienced investors to overlook the seemingly small, consistent gains of dividend reinvestment in the short term. However, over decades, these seemingly modest reinvestments can become truly transformative, unlocking exponential wealth creation. Imagine two identical investment portfolios. One where dividends are systematically taken as cash, and another where they are meticulously and consistently reinvested. Over a 10, 20, or even 30-year horizon, the difference in the final wealth accumulation can be absolutely staggering. The portfolio with reinvested dividends will often grow exponentially larger, not just because of the market value appreciation of its underlying holdings, but more powerfully, because of the ever-expanding base of shares that are generating ever larger future dividends. This is the very bedrock of financial independence for truly serious investors. For those of you with significant investment capital, this framework offers a sophisticated pathway to not just participate in the future of artificial intelligence, but to actually amplify your investment returns in a deeply meaningful way. By tapping into the high-growth potential of artificial intelligence through diversified ETFs and meticulously reinvesting every single dividend, you are essentially building a self-sustaining engine of wealth creation. You are setting yourself up not just for a comfortable retirement income, but potentially for a legacy of substantial financial security for generations to come. It's about making smart, strategic moves in your equity investments that pay dividends, quite literally, for decades. Important disclaimer. Please remember, the world of investing inherently carries investment risk, and there is always the potential for the loss of principal. The information and investment strategies discussed in this video, including the concept of advanced AI ETFs and dividend reinvestment, are presented for educational purposes only and should not be construed as personalized financial advice. Past performance is not indicative of future results. Before implementing any investment strategy, especially when deploying substantial investment capital, it is absolutely critical that you consult with a qualified financial advisor who can fully assess your unique financial situation, risk tolerance, and specific investment goals. A trusted professional can help you tailor this framework to your individual needs and ensure it aligns perfectly with your comprehensive financial planning. If this discussion has ignited your interest in truly advanced investing strategies and illuminated a clear, actionable path to amplifying your passive income through artificial intelligence, then we wholeheartedly encourage you to join our growing community of discerning investors. Please take a moment to subscribe to our channel for more cutting-edge insights into wealth management and the pursuit of financial freedom. If you found this information valuable and believe it can empower others, a like on this video truly helps us reach more individuals like yourself. And importantly, please comment below with your thoughts, your experiences with AI ETFs, or any questions you might have about implementing this powerful dividend reinvestment framework. Your engagement drives our passion to deliver truly impactful content for your financial future.